mastering the art of trading. And what we're going to do today, we're going to dig into some things that's going to be dealing with the psychic. That there's this thing right here, this the ball of flesh that's inside your head that helps you make decisions when pushing that button or not pushing that button, or tell you about things that you should be afraid of, things that you should be concerned with, and all the different things like that. We're going to deal with that today. And hopefully through this here session, you're going to be able to identify some things within yourself that's going to help you grow. Okay, going to help you to become a better trader. And that's my goal today. The reason I'm here today, to help you improve upon your trading, to become better, to become more strategic at the things that you're doing in your trading. I'm still letting people in the room. Okay. All right, fantastic. Okay, great. Mastering the art of trading. Now, I can assume that today that all of you guys here have some type of system that you're using with your trading. Would you guys agree to that? Okay. And you have some type of edge that you're using, whether it's working good or not, it is not the point. But the point is that you have been attempting to identify the areas that gives you the edge when you're taking a trade, when to get in, when to get out, to set your risk tolerance. And some of these things that you know just don't seem to be clicking or working right now. Seems like you're just a minute off or 5 minutes off or 30 seconds off on your trade, and you're getting stopped out prematurely. You're taking bigger losses than you should be taking. And you're trying to figure out, I'm doing everything right. I've studied the charts all night. I've done all the things I'm supposed to do. Why am I not winning? Don't be surprised, guys. Don't feel bad, because you're with over 95% of the retail traders out there are failing at their trading. What I'm saying to you is this here: they're losing money. If you talk to them, 95% of them are red today, this year in their trading, or this week, or today in their trading. Now, is that strange? No, it's not strange, because the retailers, the banks, the institutions, you know, they never lose on their trades. They have a discipline set in. They only buy and sell limit orders. They won't sell unless they reach a certain point. They have a system dialed in that they don't lose money. But so if that's the case, if they're not losing money, and then 95% of retail traders are losing money, and 5% are making money, what's the difference? What's the edge? What's going on with this disproportionate amount of retail traders that are not being profitable? That's what we want to dig into today. We want to dig into that session there. So what I want to speak about is helping you identify your edge, to learn to trust your edge in your trading. What is your edge? It is the actionable signals that you receive when you're trading, and it tells you certain things that you've been looking for, and you want to get into or exit the trade when these things appear. And that is your edge. Now, what happens to us as retail traders is that we don't trust our edge, or we haven't used our edge enough where it's successful, and we continue to be profitable with that edge. So we second guess ourselves. Anybody here that has identified an area in the day that you're going to trade, probably today, and you say, if price hits this area here, probably, and I want to deal with that probably a little bit later on, probably is going to do this. And then that everything lined up, the price hit this area that you were looking for, and you were required to do one thing: to take action, okay? To take action. And the question is, did you find yourself in your strategy with your edge, and it was time to execute and you hesitated? Type in the chat box if that happened to you today or sometime this week. Let me know that that's something that you're dealing with. Okay. All right. Very good. Very good. And I'm glad to know that you guys recognize this here within yourself, because the first thing to overcoming the problem is to recognize that you have a problem. To accept the fact that there's something going on in your trading that's caused you not to be profitable when you've done all the research and all the work, and it's causing you to second guess yourself. Okay, so when you know your edge and when you trust your edge, then what you're saying is that with this edge and with this actionable signal, I have a higher probability, and we're probability masters here. And what you are, you're a probability master, okay? I master the art of probabilities, right? But when you register your edge just says that I have a higher probability of one outcome over another. That's what you're really saying, is that I'll say it this way here. Whenever you get into a trade or you get out of a trade, you really don't know what's going to happen. I don't know what's going to happen. You don't know what's going to happen because we don't know how the market's going to react at certain areas. But what we do is we do the research and say, over the past 200 days, I have a 200-day moving average on my chart. Over the past 50 days, I have a 50-day moving average on my chart. I have a VWAP on my chart. Well, I know that institutions buy and sell at VWAP. Well, all these things here gives me an edge. Got it? So one of my edges is that I buy and sell at VWAP, meaning that if I'm coming from the bottom up to VWAP, when price gets within a couple of ticks of VWAP, I take profit. Why? Because we know that institutions buy and sell that VWAP. So therefore, when price gets to VWAP, it can possibly hit it and turn around and go the opposite direction, and thus causing me to give up some of my gains. Or if it's coming down from the top and going down to approach VWAP from the top, it could hit VWAP and bounce. So when it gets in the vicinity of VWAP, guess what I do? I exercise my edge because I have the information and I either take profit or I'll cut the trade if I have a single contract and I'll get back in if it passes VWAP and set my stop behind VWAP. That's my edge. Now, I developed that edge and over time, I began to trust that edge. Now, some of you guys may use different edges. You may use the strat method where you will take and break the high and the low of the previous candle to the left. I incorporate that because I consider myself to be a price action trader. Okay. Now, I'll say this to you, whatever your edge is, the greater your confidence in your edge, the easier it will be for you to execute your trades. The greater the confidence in your trade and your edge, the easier it will be for you to execute on your trades. Now, with that being said, to master the art of trading, you must, and I say this again, you must understand that there's a psychological gap between what you are planning to do and what you actually do. Okay? What you are planning to do and what you actually do. Now, how many of you guys, and I've said it already, so you don't have to type it in, but you've figured it out, you laid it out, you know your strategy before the market open, you know exactly what you're going to do, and for some reason you fumble it, you don't exercise it, you get into the trade or you don't get into the trade, you get in late or you get out too soon, and this is that psychological gap that we're speaking about. That psychological gap, guys, it is playing tricks on you. You say, well, there's a song out a while back says, my mind's playing tricks on me or something like that. I can't remember what it was, but it was about your mind playing tricks. So what that means is that you can have the best intentions to get in your trade, but if you're not properly prepared with confidence in your edge, you're going to hesitate. And I know that sometimes when you're trading, you can get in a trade and within 30 seconds to a minute of pushing the button in that trade, you could be delayed. You're not doing it when it's time to. And as soon as you push the button, the trade then ran, and then it starts to pull back on you, and then it stops you out. If that happened to anybody recently, type yes in the chat box of me. Okay. Yes. Yeah. And guys, that's because I'm just not picking on no one. Lack of confidence in your edge. I want to work with you to help you develop such a ironclad confidence in the things that you are looking to make an execution on a trade that you would, without, when that shows up, that signal hits you, boom, you're out. Now, what's the signal, guys? The signal is when it approaches your edge, whatever that is, high and low of the previous candle, the moving averages, the VWAP, whatever that may be, that is your edge. And so when that edge shows up, you're required to push the button. Okay. So the psychological gap is basically when you know to do something and you don't do it. Now, last week I spoke about how sometimes we are some of the things that goes on in our life. I made a statement today that you are words housed in flesh. Sometime between your birth and right now today, a lot of words have been spoken in your life, some good, some not so good. Some promoting you, some holding you back. We've been taught in our lives constraints. We've been taught to have boundaries in the things that we do. And we live life inside of them boundaries, and the boundaries that we have set up by our parents, by society, by the government. We bring them boundaries into our trading. And I will say this here. In your trading, there is no boundaries. Do you know the market is an endless supply of money for you at any given time? If you're able to operate and exercise within your edge and the probabilities that you take a trade. Some of us are trading and we just take any trade. Somebody called the trade out. We don't know why we push the button. We push the button. We don't now we know why we get it out, but we getting out the trade because we heard somebody say get in. We heard somebody say get out the trade. And we heard somebody say I'm cutting, and you cutting. And I can ask this question here today. Have that happened to anyone today or this week where you got in the trade and you don't know why you was in it? Or you got out the trade, you don't really know why you got out the trade. Type in the box there if that was you. Okay. Yeah. And guys, don't feel alone. It's common. So the thing about probabilities and bridging that psychological gap is this here. There's a big difference between predicting something that's going to happen and thinking about the money you could have made if you had pushed the button and the reality of actually getting in and out of trades. How many of you guys have set up your trading and you got it all planned out and you didn't push the button and you look at the trade, do exactly what you thought it was going to do? Have that happened to you before? Yeah. And it happens to me, guys. It happens to me. And that right there, I will call that is the psychological gap. That is the gap. And the thing about it is that could be one of the most difficult things for you to be able to overcome in your trading. But I can say this here, that you can overcome it. You can bridge the gap, and you're going to do that by building your confidence. Your experience in trading, your life experiences and things that you have there is some things that we've got to work out mentally to help us get things going in our trading. So what I want to say to you today is this here. I want you to be so comfortable in your trading that you actually love trading. You'll find it to be very easy. You'll find it to be simple. You'll find it to be stress-free, and as just if you was watching a trade versus when you were actually thinking about getting into the trade. So to master all the trade, I would say this here to you. You must have confidence, okay? Confidence in yourself, confidence in your choices, confidence in you getting in and out of that trade with ease. And when you understand the art of trading, when you understand the probabilities that you're actually acting upon, when you understand the risks that you're putting on the table, because let's face it, you cannot get into the market at any time unless you have an understanding that you're going to put some risk on, meaning that you're going to put money into the market and hope, pray. I hear people chanting. I hear people praying. I mean, I hear all kinds of things about people getting into the market. But you're going to get in the market, and you got to. But I put it this way here: you got to have skin in the game to play this game. Okay. So the thing I'm saying to you, your confidence will allow you to push that button at any given time that your signals arrive, and you push the button, you get into the trade because you have tested, you've back tested, you've measured your results. And I'll say this to everyone here. If you're not logging your trades, if you're not analyzing every trade that you take, you are doing yourself a great disservice. Why did I say that? Because if you don't understand the mistakes that you're making, you can prematurely continue to make the mistakes over and over again, and you see your bottom line of your account keep shrinking and shrinking and shrinking. How many guys here today, if you're green or red for this month, type in your box, say green or red. Just tell me green or red. And it's okay, guys. It's perfectly okay. You're in a safe environment. That's why we're here today, to help bridge that gap. Okay. Now, next question would be, do you currently have an edge for your trading? That means that you have a setup. You got an ABC MACD. That's what digital trades teach us, ABC MACD. Do you have an ABC MACD to know which trades you're going to take and which trades you're going to pass on? Put yes in the box if you do. Come on, give it to me. Okay. Now, next question. do you trust your edge? Now, you just type your answer, do you trust your edge? And it's okay, guys. It's perfectly okay. No, not fully. Probability not. Okay, sometimes. All right. And guys, you know what that is? Because you have random success with your edge. That's what all it is. Because the more you do it, the more successful, the more it works out. But if you're not measuring your trades, meaning that you're not measuring when you got in the trade, when you got out, how many trades you took, how many win-loss did you have, you should have a system in place. You should have Trader Sync. That's one. I don't get nothing from Trader Sync, but that's the one that helps you record your trades. But I think you should look at your trades. And if you're trading so much in the day that you don't feel like doing it, then what you're saying to yourself that I feel like continuing to lose money. I feel like I want to continue to fail at my trading. And eventually, guys, you're going to give up on trading. You're going to walk away unless you correct the bleeding. Okay. So if you trust your trade, your edge, then you're going to have a higher confidence in your trading. It's going to be easy to get in and out of trading. And now confidence is very good because the 5% of traders that's out there that's doing really good, they have confidence in execution. You know, we work with a few of them in the room there. They have no trouble pushing the button, getting in the trade. They know when to get out the trade. They know when to pass on the trade. And you don't have to take every trade that comes in. Okay, so trust your trades, trust your edge, and measure your results. Meaning that take and get a piece of paper out and put hash line, say win, loss column, and chart each one of your trades you take that you win at, you lose at. The ones that you win, look at what did you do correctly to make that a winner. And then you try to reproduce that result. Not the ones you lost at. The ones you lost, you need to identify the things that you did wrong. Sometimes our biggest thing is FOMO, fear of missing out. We'll take a trade because look like it's going to run, but it's not our edge. So we take a trade I call it a willy-nilly trade, and that trade goes against us. We say, oh man, it didn't work out. The market is against me. How many times has it ever happened to you guys? You push the button, as soon as you push the button, the market goes against you. It's like they knew you pushed the button, and really sometimes it's because you really didn't operate on your edge. You took a trade that you should have been taking because your edge had not manifested itself. So what I want to do is to help you build a confidence. I want you to be able to operate without hesitation. When your signal hits you, boom, you hit it. And a trader that operates without hesitation, when the edge appears, they become successful traders because you have the fundamentals. I know you do. You have the technical skills. I know you do because you're with the group. You know how to read a chart. You know about the moving averages. You know about the breaking and higher lows. You know all these different things it takes to be successful. But the only thing that it is that you're not trusting your edge. And that's what I want to work with you guys with at DCT Coaching. So when you start to trust your edge, there'll be no longer fear. That fear is just here. False evidence appearing real. That fear causes you to see things that you will never see. That fear causes you to have behaviors that you would never have. That fear will cause you to chase. That fear will cause you to get out of the trade too soon. That fear will cause you to push the button because you got a fear of missing out. That's FOMO, right? And the thing, what I would say to you is that you must overcome that fear. Because see, fear is just here. Fear will mobilize you. It would have you seeing things. It would have you acting an irrational behavior. It will paralyze you. How many of you guys have been in a trade and it went against you? You see it going against you. Your rule was that if it goes against me by 10%, I'm cutting the trade. And you said that to yourself, but it went 10%, 15%, 20%, 30%, and you did not push that button. If that happened to you, put yes in the box, in the chat box. Yep. And you know what it was, right? You say, I want to get this trade to work. I believe I'm right. I'm going to hold on to this trade because I'm right. And you want to be right. And that is the wrong assumption because if it breaks your trading plan, regardless of you being right or wrong, it's about what the market is going to give to you. It has nothing to do with you being right or wrong. You're a probability master. What does that mean? Is that I only take the trades that give me the edge to be successful. And when that edge does not appear, I cut the trade regardless of what. I myself, my trades, I get you not. I very rarely take 10% losses. I do, because I tell you, you might hear me say it all the time. If the candle stays green, I stay in. If the candle turns red, I'm talking to myself, and that's a good book, guys. Buy this book by Shed Hamsetter. What do you say when you talk to yourself? As a book I read about 10, 20 years ago, and I picked it up probably about 2 years ago, read it again. It's a real good read because some of our self-talk is just terrible. We need to fix it. But what I'm saying to you is here. When I'm saying if the candle stay green, I stay in if it's a long. If the candle stays red, if it's a bearish trade, I'll stay in because I only trade top and bottom of the hour candles. So when my top of the hour candle turns green because it's a bullish play, I get in the trade. I set my stop behind the wick. That's my edge, right? And long as that candle stays green, now my stop is behind the wick, right? But long as the candle stays green, I stay in the trade. But when that candle turns red from a bullish play, guess what I do? I cut the trade, and by the time I'm out, it'll probably drop me about 2 or 3%. But I'm out the trade because it didn't fit my plan. It didn't fit my edge. And when you develop that mechanical or robotic way of getting in and out of your trades, your confidence will start getting higher. You have to make sure that you focus on the information that helps you spot your opportunities. Only the information that helps you spot your opportunities. Most traders, retail traders, focus on the things that reinforces their fear. Well, if I get in here, it might stop me out. If I get in here and we do that, and that's the hesitation, that's the psychological gap that you must bridge. You can't take every trade. One of the things that helped me trade less was I only trade 30-minute candles. So I only could trade at the top or bottom of the hour. So I want you to make sure that you are comfortable in your edge and only operate getting in and out of trade on your edge. I want you to be comfortable being uncomfortable pushing that button when you're operating on your edge. I want you to be comfortable being uncomfortable when you're operating on your edge. And when that trade go against you, no matter how you feel, no matter how much you've been praying, no matter how much you chanting, you push that button and you get out that trade. No matter what. Because you can always get back in the trade. I have some traders tell me, well, my account is only so big. If I cut the trade, then I can't trade no more today. You're supposed to cut the trade because your only job in this trading industry is a risk management. That's what you are. You're a risk manager. What does that mean? That means that you manage your portfolio and you manage your risk. So you can't predict what the market's going to do. You have a probability what it's going to do, but you can't predict the future. No one can. But what you can do is say, based on my information, based on historical precedents on how the market responds in certain areas and certain conditions, my probability is very high that this trade will be successful. So you want to make sure that you push the button when it's time to, and make sure you push the button to get out the trade once it's time to get get out the trade because it did not work. Now remember, it doesn't mean that you're right or wrong. It's just that the market didn't cooperate. So you're never wrong in trading. The only time you're wrong in trading when you don't exercise your edge. The only time you're wrong in trading when you don't stick to your plan. The only time you're wrong in trading is when you sit back and you don't take profit when you're in a trade. That's when you're wrong. So these things you can control. Other things you cannot control where the market's going to go. You can't control where it's going to respond because remember, the market is alive, it's active. Whoa, how does the market alive and active? Because they have millions of trades going by today by millions of individuals that's trading, and all of them have a mind, and each one is operating on information like you are, and they can be erratic at times, just like you are erratic at times when you're trading, and you get enough people that's moving in the same direction, they'll move the market. You know, one of our commander-in-chief, when he buys 200-300 contracts, and he literally moves the market. You ever seen him get in a trade, and you're in a trade, and the price jumps about a point or half a point when he pushes the button? Or when he get out, it goes down about that much? That's why one of our traders says, wait, before you push the button, let me get out first, because they know the market is going to respond. Well, that is a accumulation of orders going into the market and being distracted from the market moves the market. That's why you can never predict where the market's going to go, but you can have a probability of where the market is going to go. So understand that's here. You don't need to know what's going to happen in the market. Okay. Every moment in the market is unique, meaning every edge and outcome is truly unique every time you push the button. Every moment, every outcome is unique every time you push the button because them patterns will repeat themselves over time, but you never know when they're going to show up. So your only thing that you can do as a trader is manage your risk. You are a risk manager. That's what you do. I manage risk. Okay. What risk I manage? My portfolio. Okay. So understand this here. The trade will work or it won't. So I'm going to be okay. So if you have the confidence, then you must have discipline. So the discipline is this here. I have a strategy. I have a game plan. I have my playbook. And therefore, I'm going to operate this market with this playbook. If you don't have a game plan, you don't have a plan, a playbook, then what are you being held disciplined by? Okay. Your rules are the discipline that you need to be successful in this market. Your rules are necessary to have the discipline to be successful in this market. What does that mean to me? That means that when I take a trade, I know exactly how much risk I'm going to be willing to accept. If the trade violates any one of that parameter, I'm out the trade automatically, no matter how I feel. The rules says that when I get into the trade, I know my profit target would be. See, I may not set it to get out there, but I know where I want to take profit at. And if the price moves past that, I'll move up the line on my chart to say, if it comes back to here, I'm going to sell and get out of this trade. How many of you guys get into trades and you making money? The price have moved into your favor. You're in profit, and it comes back and stop you out of the loss. Have that ever happened to you before? Type it in for me. Yeah. Okay. And we're going to work on that, guys. I want you to really pay yourself every time the market make money available for you. That's discipline. What does that mean? If I'm trading 2 contracts, then when the market gets up about 10, 15%, guess what I do? I take one of them contracts, I move that stop up to that 10% mark. If price comes back there, it stops me out on one contract. I leave my initial contract stop right where it's at. What I find many traders do today in the area of lack of confidence, they will go through and they will take the trade. As soon as the trade start moving a couple of ticks, they move the stop to 0. Well, you agreed before you push the button, I'm going to put so much capital at risk. So for your trade to work out, because you did your due diligence, you know what that risk needs to be to have this trade to work. You agreed to do that. And then as soon as you got into the trade, it moved 2 ticks, you moved the stop to 0. And then you got stopped out. You said, whoa, man, that trade didn't work. No, you broke your own rules. That's what happened. So when you make the decision to get in the trade, then therefore you must be willing to take the risk. And if you're not willing to take the risk, then you must pass on that trade. That's discipline, game plan. Next, have a winning attitude, guys. This is key. This is key. This is key. A winning attitude is essential for you to win in this trade. Now, I hear people, I'm on audio almost all day during trading hours. This self-talk is garbage. I'm going to tell you right now. Self-talk is straight up garbage. And I'm not talking about any individuals, but you have to have a winning attitude. You see, if it's to be, it's up to me. I'm a winner. I'm an achiever. I'm an overcomer. That's my self-talk. I do it. I have one I do this here. I say, I feel good. I feel fine. I feel this way all the time. If you ask me why, I tell you why. I have faith, courage, and enthusiasm. You say that 10 times at the top of your voice. When you're feeling bad, it'll shift your whole disposition. It'll shift your mental state from being negative to positive. I do that in the shower. I do that when I'm sitting at the computer. I've made a couple of bad trades. I will shift my position. I feel good. I feel fine. I feel this way all the time. You ask me why, I tell you why. I have faith, courage, and enthusiasm at the top of your voice. Your neighbors may think you crazy. Your wife or your husband may think you done lost your mind. But you know what you need to do to shift your mental state, because if your mind is corrupted and your mind is not right, guess what? Your trading is going to follow suit. So what you're going to have, a winning attitude. We're going to talk about some things that's going to help you out with that at the end. So I want to talk about having confidence right now. See, to have confidence, guys, it is essential. It is essential that you eliminate the emotional I'm going to say that emotional risk that you carry. What does that mean? FOMO, fear of missing out. To eliminate the emotional risk, you have to neutralize your expectations about what the market will or will not do at any given moment or any given situation. What does that mean? When I push the button, I have to neutralize my expectations, because if I have a predisposed, now don't get me wrong, I'm a probability master, so I'm looking for the market to move in my direction. But my expectations, if I have them, I can not push the button. That causes me to hesitate because I did not eliminate the emotional risk. Okay, so I'm going to disconnect myself from the outcome totally. My only job is to push the button, manage risk, and take profit. That's it. That's your only job as a trader, to manage risk, push the button, get in the trade, and take profit. That's your job. What's going to happen? You don't know. 50-50. You hear me say that all the time. What's going to happen? 50-50, 50-50. So you got to be okay with saying that at any given moment, in a situation, anything can happen, because the market does not follow logic. This is what makes trading hard for business owners and leaders. You see, because we're used to being in a place of control. You know, I own the business. Everybody listens to me. I set parameters up. Everybody bows to my will. And we want to control or manipulate the environment around us because we're the boss. All right? And there's nothing wrong with that. A successful business have to have them kind of constraints. But in the market, there's totally the opposite, because you have control of nothing but three things: entering, managing risk, and taking profit. That's it. Where the market going to go, what it's going to do, you have no way of knowing. But you can do your research. You can deal in the area of probabilities and only take the high probability trades. So you're going to eliminate the emotional risk. Okay, you're going to be willing to look at the market from the market's perspective. What does that mean? The market has no idea what it's going to do because it's controlled by human beings, individuals pushing buttons, buying and selling orders all day. So what you're going to do is you're going to make sure that you are knowing that the market is erratic. It's not logical. It doesn't make sense most of the time, because we've been in a place where the market's fit to run and we know it should be running here, and it does just the opposite. Have that ever happened to you guys before? It looked like it's going to break out. It's at that strong place of resistance, and instead of running and hitting the resistance and running through, it hit it and turn around and go the opposite direction, because somebody on the other end of that market had made a decision to buy and sell the underlying at that place, totally opposite of what the logical thing for the market to do to happen. And this is where you guys have to manage your risk. So if you neutralize your expectations about the market, then for when the market does not behave the way you want, you're going to exercise your edge and get out the trade. You're going to exercise your edge. You're going to take profit. Okay. So I want to make sure that you think from the market's perspective. Okay. Think from the market's perspective, because remember, the market is a collective of individuals buying and selling commodities all the time. It doesn't make sense. It is not logical. So don't look to be logical in the market. Don't look to control the outcome of the trade. All you're responsible for is three things: getting in the trade, managing your risk, and taking profit. So that should take the pressure off of most of you guys right there. What is your job? Type it in the chat box. What's your job? Three things: managing risk, taking profit, and entering the trade. Right, let's say it right. Managing risk, entering the trade, and taking profit. That's it. So remember, your edge can look perfect. You can like everything is set up, but it doesn't mean it's going to work. You're a probability master. If you're trading and you're at a 50% win rate, you're in the top 5%. Do you know most successful traders don't win 90 or 100% of the time? They're at a 50% rate. Some of them are lucky they're at a 60-70% rate because they understand the risk. But the thing is, the risk that they understand, they have a set at a small level, whatever that's going to be. And you ever heard this term, cut your losers quick and let your winners run? Well, the master trader knows the risk, defines it, takes every trade that meets their edge, and then when it doesn't work, they get out the trade. And that right there, guys, makes your trading works. So what I want to do is make sure I have eliminate my emotional risk, meaning that I'm not going to be mostly tied to the outcome of trying to be right, trying to understand what's going on. I don't know what tomorrow is going to, the future is going to bring. My job is to push the button, manage risk, and take profit. That's it. If I just have them three things going in my mind, then it takes all the pressure off of me. I clearly understand my edge, and I've measured it out. I've said, okay, over the last 100 trade, on my edge, I won 60% of the time, I lost 40% of the time. Do you know that right there, that you will be the most profitable trader in a room with that kind of statistics? If you take 10 trades, you win 6 and you lose 4, you will be more profitable than most people that you're trading with. Okay, so what you're going to do, you're going to respect your rules. You're going to respect your entries. You're going to respect your exits. You're going to respect your taking profits because you're a disciplined trader. Okay, now, I'll say it this way here. You have to understand, accept this here. The market is a probabilistic environment, meaning that it operates in probabilities. You are a probability master, meaning that you measure twice and you cut once, meaning that you do your research, you look at where the market's been moving at, you find the trends. What is my trend, guys? My trend is the 50 DEMA. My trend gauge, I use the 50 to tell me in the day trading session, what's the trend for that day. If the market is below the 50 DEMA, I'm in a bearish perspective. If it's below the VWAP, I'm in a bearish perspective. If it's in below the 200 moving average, I'm in a bearish perspective. What does that mean? That means that the probability is very high that every time the market has a pop, there's going to be a drop behind it because the trend is going down. So therefore, I'm not trying to go long on any of them plays. Now, let me give a caveat to that. I'm a scalper. I'll scalp all day long. I'm running short, but I see a bounce play. I'll take a scalp and get me 20, 30% on it, cut it right quick, and then continue down. I'll do it all day long because that's how I trade. But in the market that we do is a probabilistic environment, meaning that you operate in the market with probabilities, no concrete facts about what the market is going to do. How many times we start the market and the market is going to run today, and we, instead of running today, it starts to drop off. You say, why did that happen? That don't even make sense. It doesn't make sense. And I want you to be okay with the market not making sense. Okay. Your exposure to risk. I want you to be comfortable to understand that risk is part of the game. Before you take a trade, I want you to look at the candles of the trade, the commodity or the underlying that you're going to trade. I want you to measure, hear me out, measure the candle body size, whatever it is for that underlying that you're trading. Measure whatever that body size is, that's the average size of the candle. Then you take that body size and you use that to gauge your risk, okay? Or you can take it, and this is something I teach, and it's called the Kelvin, and you can take it and measure the wick size if you do the 30-minute candles. It only works on higher time frames, doesn't work on lower time frames. It could, but it will work a lot less. But measure the wicks on the candles. What's the wick of the candle? That is the average pullback when it goes. How does a wick created? If a bullish play takes place, it's going up. As soon as that new candle hit, the market always goes back, pull the orders that's below it, gets the liquidity that it needs, and goes back into the candle body, flips it from the red to green, and moves up. That creates a wick. That wick is the area of resistance at the bottom or support at the bottom for it. So if you put your stop behind that wick, your probability of getting stop out going to be less. Now, is that acceptable to your risk? And if it's not, then you must find another underlying to trade, or you have to find another entry that will fit your trading style. Okay. Now, the probabilities consist of 5 things. Okay, 5 things that I think that would be essential for you to understand, and you got to understand these things. I think is going to be fundamental to everything that you do. Okay, so first thing I'll say is that anything can happen. Anything can happen at any given time. Okay, you don't need to know what's going to happen in order to make money. Are you okay with that? Are you okay with not knowing what's going to happen to take a trade? If you are, type in the chat box, I'm okay with that. If you do know what's going to happen. Come on, type. I don't see nobody typing there. Are you okay? Okay, good. When you accept that, guys, what you do is you're bridging the psychological gap. I'm okay. I don't know what's going to have to happen, but the things that you need to know: when you're going to exit, when you're going to take the trade, and when you're going to take profit. That's what you need to know. The other things that you don't need to know. Now, what's your acceptable risk? Let's say this here. Whatever your portfolio size, you should never put more than 10%. And now small accounts is going to be different, but 10% of your portfolio in any one trade. Okay. You should never lose them. Some people say 1% or 2% of your portfolio size in any given day. When you reach that area, you should have discipline and say, I'm cutting off the trade. I'm not trading no more today. Okay. Knowing this here is going to keep you safe, because sometimes you'll be in a place where you've got 2 or 3 bad trades and mentally you're not sound to trade anymore. It means that you must be willing to walk away. Okay. Next thing I would say to you is that there is a random distribution between wins and losses for any given set of variables in a defined edge, meaning that when you take that trade, there's what's going to happen may not make sense. It may not add up. You may be totally surprised. Your mind may be blown. If it doesn't line up and it does not respond to your edge and it violates your risk parameters, you must cut the trade. So when you understand these here truths, then your trading will become easier, because now there's no pressure. I already know that I'm taking a trade. I'm putting $500 at risk. I'm willing to lose that $500 to make $5,000 or $200 or $1,000. Hopefully, it's a 2-to-1 win ratio for yourself. And you have to let that trade play itself out. If you let the trade move 2 ticks and you put the $500 up, but then you move to stop the break even because you think it's going to run, it stops you out. Then you do that 4 or 5 times. Now you done lost $1,000 where you only had the $500 to that you risked at first, because you did it 5 different times. If you left it alone, the trade went back $250 into your risk parameters and then took off and ran another 6 or 7 points up, and you missed $1,500 because you wasn't willing to take the risk that you said you were before you pushed the button. So make sure you change that situation in yourself. Okay. Next one would be, make sure you understand that an edge is nothing more than an indication of a higher probability of one thing happening over another. Just know that. Probability. Are you okay with the risk? Accept the risk, and then therefore you're going to have peace. You're not going to have the anguish, and don't take the willy-nilly trades that don't line up with your trading plan. And the last one would be is every moment in the market is unique, guys. Because it did it yesterday, or it did it last hour, it doesn't mean it's going to repeat the same thing this hour. So you're always ready for the unexpected. You have defined your risk. You know where you're going to take and exercise your edge. And every time your edge shows up, you're going to take the trade, period. Because of the probabilities, because that you know your edge works 50% of the time, you're not going to be nervous. You're not going to be tied up about it. You're just going to take the trade. So I would say to you, confidence is your key. So this is what I would say for your confidence. You must stay mindful that success in trading requires you to master your emotions. You got to master your emotions. So if you find yourself emotionally not sound today, you're mad at somebody got on your nerves, you're not feeling good, don't trade. Because you need to be 100% when you're trading every day. You can't have the TV going in the background. You can't be talking on the telephone. You have to be focused, because listen, you got thousands of dollars sitting on the board here. This is not a casual thing. This thing can ruin you or can take you to unbelievable success. So you want to be 100% focused when you're trading. No television on, no talking on the phone, no trades. If you are, you have no trades going on at this point. You can walk away, but never trying to push the button, trade, analyze while doing multiple things, because I guarantee you're going to lose at it. See, most traders don't believe that their trading problems are a result of the way they are thinking about trading, or how they are, what are they thinking about while they're trading. Most don't believe that, but it is a true statement, and it is something that will cause you anguish and pain. So I'm going to give you this here for you. and this is, I didn't originate this, I pulled this out of the book. It says, I'm a consistent winner. It's your self-talk right now. We talk about self-talk. Write this down. I'm a consistent winner because I objectively identify my edges. Objectively meaning that I don't have a bias. And you hear me guys say sometimes I'm biased short, I'm biased. And I catch myself when I say it because the truth is I cannot be biased. That's one of the things I do to center myself. I say, where's it going? 50-50. I don't know. If I do that, I neutralize my expectations. And guess what it does? If it goes up or down, I'm ready to push the button. I'm like, you say, I'm long. Then I said, turn around and say, oh, I'm short. You say, well, how does this dude getting out of this trade? He was going long 5 minutes ago. Now he's short. Well, he don't know what he's doing. Yeah, I do know because I have neutralized my expectations. I only act on what the market gives me to act on. I predefine the risk of every trade. This is you. Say it to yourself. Say it. I predefine the risk of every trade, meaning that I know the risk. I accept the risk. Therefore, when I push the buttons, I'm not going to be nervous. I'm going to be just fine because 50-50 is either going to work or it's not going to work. And you get to that point, guys, everything changes. Your trading will become fun. It will become enjoyable. You will find yourself really enjoying the thing of trading. Here's the third one. I completely accept risk, or I am willing to let go of the trade. I completely accept the risk, or I am willing to let go of the trade. How many of you guys can agree with that one? Type it in. Come on. That's a good one there, guys. That's a good one. The next one is I act on my edges without reservations or hesitation. So when you get to the level of confidence, you're going to act on it without hesitation or reservation, meaning that when your edge shows up, push the button, man. I joke, push the button, man. Push the button, man. Push the button. Next one is I pay myself as the market makes money available to me. You got 2 trades going on. It goes up 10. Let's say you had a 10% risk and the trade runs off 10%. Move the stop up to 10% on one of the contracts. If it stops you out there, you stopped out. If it comes back and stop you on your original 10%, guess what? You got a risk-free trade. That's why you do it. If you got a 10% risk, take one of the contracts off. If you trade 3 contracts, take 20% off at 10, 15%. Now, you don't necessarily have to cut the trade. You can move the stop up to that level. So if price comes back there, it just stops you out there. You've minimized, you lessen your risk on the trade or your exposure to the trade. The next is I continually monitor my susceptibility to making errors. This is revenge trading, guys. This is when you messed up, a trade got you, you want to get your money back. Now the error is I'm going to double up this time. I'm going to go harder this time. I'm going to hold longer this time. That is not your strategy. That is not your plan. You can't do it. The trade didn't work. You can get the money back another day because I guarantee you, if you continue to operate your edge, over time, you're going to win more than you ever could lose because you're never violating the principles of your risk. It's clearly defined. You're taking profit when the market makes it available. And you are getting every trade that meets your edge. The next one is number 7. I understand the absolute necessity of these principles of consistent success, and therefore I would never violate them. I'm going to drop that in the Discord tomorrow. This is not mine, but I think these rules are very, 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 very important to you guys.